Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at interactive brokers.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis.
Let's do it. Interactive brokers. The first thing that just jumps off the page is their earnings. They look like an engine.
They really are, an incredibly efficient one at that. They just posted really spectacular results for Q3 2025.
What were the headline numbers?
The diluted EPS was 59 cents. Even when you adjusted, it was still 57 cents.
And what was the consensus expecting?
Consensus was way down at 52 cents, so they crushed that by, nearly 10%, a 9.62% beat.
Wow. Okay, so a beat that big isn't just a fluke. Something's really firing on all cylinders.
Yeah.
What's actually fueling that?
It's coming from three core areas, and they're all very durable. First, record net interest income.
So making great money on cash.
Exactly. Then you have high commission revenue, which tells you their users are very active. And finally, really strong securities lending. It's not a one-trick pony.
Right. And that net interest income piece, the NII, that's so critical in this environment, isn't it?
It's the most critical element. It's a direct result of their massive scale and how they manage all that client cash.
And year over year, how does that growth look?
Well, this is the really impressive part. The growth is actually accelerating. They delivered 31.4% growth over the last year.
31%. And their 5-year average is what?
It's 29.8%. So they're actually outpacing their own, already very strong average. They're getting bigger and moving faster at the same time.
See, that's what's so counterintuitive. Usually a company this big in a mature industry, you expect growth to slow down, not speed up.
It suggests they're taking market share and opening up new channels. And what's critical is it's not coming at the cost of efficiency.
You talk about margins.
Exactly. Net profit margins expanded to 15.4%. That's up from 14.1%. It just speaks to how good their proprietary tech platform is at keeping costs down.
And the foundation for all this, the balance sheet, has to be solid.
It's more than solid. It's robust. Total assets are sitting around $200 billion.
The $200 billion balance sheet.
And that's a 35% increase year over year. That's phenomenal. It's that strength that lets them do share buybacks and, more importantly, keep reinvesting relentlessly in their technology.
Like the new AI-enhanced global trader app. They're not waiting around.
They are actively building their moat higher and higher.
Which is a perfect segue. Let's talk about that moat, their competitive advantage.
Yeah.
Because when you say brokerage, people think Robinhood or Schwab. But this is a whole different ballgame, isn't it?
It's a completely different game. I think a lot of people miss this.
They just see trading and lump them all together.
Right. But their core moat isn't about attracting casual investors. It's their proprietary low-cost trading technology. It's engineered for professionals.
The institutional clients.
Yeah.
Super active traders.
Precisely. It gives them superior execution speeds. We're talking milliseconds and rock-bottom costs. And for a trader whose whole business depends on quality execution.
The switching costs must be enormous.
Tremendously high. If you're running thousands of trades a day across the globe, you simply can't afford to go to a platform that's even a fraction slower or less reliable. It's not a commission war for them.
They're more like the arms dealer for the professionals.
A great way to put it. And their global reach is where that really shines.
It's a true international play. Access to over 150 markets.
Absolutely. Think about it. An asset manager in London needs to trade UAE equities, or a trader in Asia wants to fund their account with stablecoins.
Which they actually support, right?
They do, and it's a unique feature. Their U.S.-centric competitors just can't offer that kind of multi-currency, multi-jurisdiction complexity with the same quality. It's a huge protective barrier.
Okay, let's switch gears to the technicals.
Yeah.
The performance has been, well, pretty incredible.
It really has. Year to date, the stock has seen gains of 40.84%.
And the 5-year picture.
5-year total returns are a spectacular 332%.
That's undeniable wealth creation. But what's interesting is, even with that run, there's been a recent opportunity, a bit of a pullback.
Yes, a pullback of about 12% from the highs. And the question is always, is this weakness or just profit-taking?
And the chart suggests it's more of a healthy consolidation. It looks like it's formed what analysts are calling a constructive base.
Exactly. It's making higher lows. And technically, the stock is still trading well above its key long-term moving averages. That confirms the uptrend is still very much intact.
So for someone looking for an entry point, where are the key levels?
Analysts are pointing to the support level around $64. That seems to be an attractive area where buyers have really shown conviction.
And for the real technical chart watchers, there's another signal that lines up with the fundamentals, right?
Yes, for those who like to get into the weeds, there's a hidden bullish divergence in the RSI and EPT.
Can you just break that down really quickly?
Sure. It just means that while the stock's price made a higher low during the pullback, the momentum indicators actually showed increasing strength. It's a signal that the buying pressure underneath is very strong.
Interesting. So the technicals confirm the fundamental strength. What about sentiment? How is the market feeling about this stock right now?
The perception is predominantly bullish. We're seeing an average sentiment score tracking around 0.30.
And that's being fed by some real tangible catalysts on the horizon.
Absolutely. First up is the relaunch of that AI-enhanced Global Trader app that's slated for December of this year.
And that's not just a facelift.
Not at all. It's about using AI to make sophisticated global trading easier and faster. It drives user acquisition and makes the platform stickier.
And then there's the crypto expansion.
Right, the stablecoin funding. That directly taps into a younger, very active trader base. But this is where the conversation gets really speculative and interesting.
You're talking about the rumor.
Exactly. The unconfirmed but persistent rumor about an Ask IBKR tool.
An AI-powered assistant for traders.
Imagine being able to ask an AI complex regulatory questions or for help structuring a global trade. If that's true and it's rumored for October, it's a total game changer.
And that kind of AI and crypto push, it hints at a broader move into DeFi. If they pull that off, you could see a massive retail surge.
You could. Similar to past trends we've seen, it could trigger a rally that nobody's pricing in right now.
Okay, so let's put some dates on the calendar. What should people be watching over the next 3 months?
The single biggest event is the Q4 2025 earnings report. That's scheduled for January 20th, 2026.
And what's the consensus there?
Consensus EPS is around 54 cents. But given their history, that almost 10% beat last quarter, I think there's a strong potential for another upside surprise.
On the macro front, we can't ignore interest rates.
Right. Any potential future rate cuts would generally be favorable for them. While high rates have been a great tailwind for their NII, a more stable environment often fuels more trading activity.
Which brings us to the elephant in the room. We have to talk about it. The valuation.
You have to. You can't ignore the risk assessment on a stock that's run this much. The bear case starts and ends with its valuation premium.
What's the PE ratio sitting at?
It's at 31.2 times earnings. That is comfortably above many of its peers. So the question is all this amazing growth already priced in?
And this creates a huge conflict for investors. That means some purely conservative models like a DCF.
A DCF model might spit out a fair value closer to $34.
But then the prevailing narrative from analysts, factoring in the moat and the AI catalysts, puts price targets where?
Often around $77, which would imply, a 16 to 20% upside from here.
So how do you reconcile that massive gap between 34 and 77?
I think you reconcile it by focusing on execution. The $34 number assumes things normalize. The $77 number is pricing in success. And that recent 12% pullback, it may have already priced in some of that debate, offering a better entry.
What about short interest? Are people betting against it?
It is rising, yes. It's up about 13% to 2.53% of the float. So there are some bearish bets.
But how does that compare to peers?
It's still quite a bit lower. The peer average is closer to 4.12%. So it's a risk indicator, but it's not alarming just yet.
Okay, so let's tie this all together.
Yeah.
What's the elevator pitch for someone looking at this stock now?
I'd say this is a technology company that happens to be a brokerage.
The thesis is built on that tech moat, which drives that accelerating earnings growth. That 31.4% YOY number is the one to remember.
You combine that with the near-term AI and crypto catalysts and a spectacular history of returns, 19.57% annualized over 15 years.
So it's a compounding machine, perfectly positioned for the growing sophistication of global trading.
Exactly. It's a compelling mix of stable finance and really cutting-edge technology. So for you, as you're learning about this stock, there are two key things to track going forward. First, the execution. Are the AI and crypto initiatives actually delivering? And second, that Q4 2026 earnings report. This company's history of beating earnings is what drives its momentum.
That's a wrap on our analysis of Interactive Brokers. Don't forget to track those catalysts and those crucial Q4 dates we mentioned. And remember, if you want continued analysis like this, please consider subscribing to Smart Wealth with Joshua for all your daily stock insights.